Hello guys, welcome to another video. I've taken long minus posting, but we're back with this content. Now today we're going to be looking at trading psychology. And if you haven't subscribed to this channel, you can click the subscribe button down there. And if you haven't joined our Telegram channel or community, there is a link in the description that you can click. Now today I'm going to be telling you guys about our trading psychology, and we're going to begin with the key contributors. Now the first one is personality and characteristics. We are different people, we behave differently, and we have different characteristics, like behavior wise, right? All this can affect your trading, like your characteristic as a person, like who are you, and your personality. It can affect trading. The next one is emotional response. How do you respond to emotional biases as a person? Like, this is individually. Some people respond in a negative way, some other people respond with a positive vibe. The next one is social pressure. Like, you see the way you go to Instagram and the pressure gets into you. You see other traders posting mad profits, and you ask yourself when they be buying fancy cars and all that stuff. All this is social pressure, and there is the way we all react, like, differently. You may find I'm the same with someone else, but we can't be the same out of 10 people, right? Then there are behavioral biases. Like, we all behave differently, and this is different in trading. I may stay in losses longer, which is not right, and I may hold my profits longer, which is right. And it's the inverse for other people. But all this can be solved. Now, breaking that down, we have different aspects like fear, greed, anxious, FOMO, that's fear of missing out. We have overconfidence, we have doubt, we have nervousness. You get? Now, let's break down each. Let's start with greed. As traders, we all want a lot of money, right? Guys, it's the reason we are here, like, to make money. But at some point, if you overwant, like, you over expect the market to reward you, it leads you to, like, greed. Like, you always want a lot. At the end of the day, the market can go into profit and come back and hit your stop loss just because you failed to take out what was enough for that specific time. At the end of the day, you don't make any money. So that is greed. Like, you want a lot, yet in actual sense, you may be jumping in. For example, those who trade Elliott waves, you may be jumping in on a wave 5, thinking that you want more than where the wave 5 would continue to push further. You get? So that greed can keep you in that state for long. So the next one is fear. Fear of taking a trade, fear of actually trading itself, fear of trading, fear of taking the trade, fear of closing losses early that you may miss out because the market may go and come back in your direction. There's a lot, like fear of posting your setup. Like, the reason we made the channel, the Telegram channel, is to post setups from different people and share ideas in this whole trading thing. But there are people who fear to actually post their setups because they wouldn't allow that someone else has seen my setup, but if it hits stop loss, how will they react? How will they behave? All that. You get? That's all fear. So the next one is let's talk about overconfidence, right? There's overconfidence where you expect all trades to hit your take profit. It's all we want as people, but it's not what actually happens. Even pros make losses, right? But if you're overconfident that you can't even close your losses early to confirm that, okay, I'm wrong, but let me close my profits, my losses early, so that I minimize the losses. All this overconfidence can make you remain in that state of not being profitable, right? And it's worse if you don't want to learn from anyone else. Like, you're too confident in yourself that you know everything. At the end of the day, you're not adding. Yet trading is not about charts. There's that microeconomics that someone else can tell you, and you become a better trader, right? Let's look at FOMO, fear of missing out. So now this works for now people like me who wait for the market to come to us, then we react accordingly. And FOMO hits you, and before it even reaches your zone, you see like a reversal candlestick pattern, and you jump in. Then the market comes and takes you out and goes in your direction. At the end of the day, you fear to miss out, but you're being stopped out. This happens a lot. Like, you see that news is coming in, you fear to miss out on profits. Other people are posting analysis. At the end of the day, you end up making losses. Yeah. So there is doubt. Like, you doubt in every setup. maybe you're in this group, like Telegram group, then you post this analysis and someone else posts a counter analysis that's going opposite to yours, right? At the end of the day, you doubt your setup. At the end of the day, something will happen and your setup goes in your direction, but you already have the doubt, meaning you fear to take your own setup. You don't believe in yourself. You doubt your trading. This is psychological. Like, it affects us a lot as traders. Those who are beginning, most especially. Then there is nervousness. Like, you're nervous. You're always nervous that immediately the trade starts going into profits in your direction, you cut out the profits. This used to happen to me a lot. Like, immediately it's in profit, I take it out. You're nervous, like you don't know where it's going. You're scared. You're scared to hold your profits. So all this can be worked upon. Like, you can work on each, like to perfect your trading and help you move on. So all this can be worked upon by you yourself. No mentor is going to help you out there and help you and tell you that, okay, if you do this and do this, your psychology, of course they'll just give you tips and quotes to help you in your psychology, but they won't help you work on your psychology on your own. And for starters, trading a small account doesn't mean you're making small losses. You can get $100 or $10,000 and blow it, just because you minimized how you would handle a $10 account. Now, just set yourself a target, like start trading $10, right? And see how long you manage to keep that $10. If you're able to grow it, meaning you can handle any account size, because you've handled the small ones. Of course, the big ones can play psychological, because now you're working with big figures. But if you're not able to manage $10 to grow it to a big amount, or to handle it for some good time, then you won't be able to manage a huge account. That's it. So those are the tips I had for you guys. So all this can be worked upon if you have a proper trading plan. Always have a proper trading plan. When you come into the market, know that I've come into this market, I'm willing to take this risk. This is the percentage I'm willing to risk of my account. It's in my trading plan. You have a proper trading style of trading. You'll be thinking like, of course, when you approach the charts, you'll be thinking differently from your normal way of life. That's trading. So thank you guys for watching this video. It was too short, but I hope everyone can work on the tips I've given. That is fear, overconfidence, greed, anxious, FOMO, doubt, nervousness, all that. So thank you for watching.